Hey, Courtney Smith here, and I want to talk about one of the most important concepts behind investment success, and that's momentum. Momentum is a subject, is a technique that I've been using for over 35 years and is one of the cornerstones of my whole investment approach. And what momentum simply says is that trends persist. Let's take a look at an article that's in the current issue of The Economist, and I've put up the URL, which you can see down here if you want to type it in. I'm recording this on January the 13th, so there will be a new issue coming out in a couple of days, but this article was fantastic because it looked at momentum and looked at the track record of using momentum. Let's take a look at one of the studies that they present. And in this case, it's the stock market. This study was done by AQR Capital Management, which is a quantitative hedge fund company. And the basic technique is they took, in this case, let's look here at the bottom, the top 20% of stocks in terms of performance at the end of 1 month, then holding those for a second month. So we're taking the top 20 percentile of all stocks, we're buying those stocks, we're holding them for 1 month, and we're rebalancing with the new strongest 20 percentile of all stocks. Now, of course, most of the time, those will be the same stocks that were in the previous month, but there will be some changes. So buy the top 20%, hold it for a month, rebalance, and keep doing this all the time. Now, of course, transaction costs will be pretty high in a strategy like this, but for you and I, we can open an account at a brokerage house like Zecco, Z-E-C-C-O, which gives you 25 free trades per month, in which case now we're paying no commissions on our trades by putting this idea into effect. Obviously, we're not going to do 20% of the whole stock market. We're going to pick just the best of the best stocks. But what this says is that you can see the top 20%, the dark bar shows that the returns from 1927 to 2010 were about 16%, and the light blue shows that the excess returns over the stock market were almost 10% more than the stock market. Now remember, this is 10% compounded, so this is a tremendous gain over just buying and holding the stock market. And in fact, it's a tremendous gain over virtually all mutual funds and professional managers as well. And notice also that we look at the top 20% and it is the strongest performer. Then the next quartile or quintile is the next strongest, and so on and so forth. So there's a clear advantage of buying only the stocks that have recently been very strong. Notice that this goes against what you are usually taught, which is you should buy dips. No, you should buy strength. Let me show you another chart from the same article, and this takes British shares in this particular case, and it assumes that we started with £1 back in 1900. So we're going to invest £1 in 1900. And if we had bought the bottom 20 percentile of strength of stocks, in other words, the stocks that were the weakest 20%, and rebalanced annually, we'd have £49 110 years later. Now, after inflation, devaluation, and taxes, that means you were wiped out. Even your £1 is probably not even worth £1. If you bought the middle, if you basically bought the stock market, you would have had about £20,000 after 110 years, starting with $1. So that's pretty impressive. But if you had bought the top 20 percentile at the end of 1 year, held it for another year and rebalanced, you would have had £2.3 million. Look at this. £49 for the bottom 20%, £20,000 for the middle, but £2.3 million for the top 20 momentum stocks. And remember, we did no fundamental analysis and we used no risk management at all. So I believe using the techniques that I teach, we can actually improve on the performance of what I'm showing you here. I'm going to do a few more videos on momentum, but I wanted to give you these great statistics to show you that the underlying concept is very powerful and you really must be including it in your investment techniques. Thanks very much. Talk to you on the next video.